David Winters is the CEO of Wintergreen Advisors. His Wintergreen fund ranked in the 97th percentile for its peers over the past 5 years. Welcome, David. Great to have you here on Street Smart. Let's talk about the liquidity trap. Anything from today's press conference that would suggest that we're not in a liquidity trap?
Well, it's hard because we're trying to create employment, jobs, growth, and there's more and more money being pumped into the system.
What is a liquidity trap, first off?
It's an economic terminology. It means pushing on a string.
Tom Keene would ring his bell right now. Right. Jargon alert.
Yeah, there we go. Well, what it really means is that you pump so much liquidity into the system that it's not working. And so what we really need to see is traction. And at some point, there'll be confidence again in the economy, which is, I think, what we really need, Lisa, which is not jargon, and then people will start to consume and build, and then the economy begins
and be able
again
to raise prices, right?
That's a key thing. We love pricing power. I think it's a key thing. Lisa's wearing a Panerai watch that's made by Richemont, one of our holdings.
Very nice, by the way.
Thank you. Thank you very much.
And there's a lot of pricing power in watches, so we love the watch business.
So when we talk about the liquidity trap, would you, and we heard this during the press conference today, Japan, would you say they were in a liquidity trap? And are we setting ourselves up for a long period of time where we can't get out of the trap?
I certainly hope not, Lisa. But I think that, again, that's why we're looking at Wintergreen on a global basis for where there is a lot more economic activity. We think the U.S. economy will recover. It's just going to be slow.
Actually, I was just talking with Tony Dwyer, our last guest, very bullish, which is one interesting take that he offered. But the other thing that he says is now is the time to invest, right? The last 10 years, it was great to be a trader. You got to 2000, you had incredible decade-long returns, you had a surplus, and then you started trading to make money. Now he says you got to go back to being a long-term investor. And I'm guessing you'll agree with him there.
I totally agree. I think, basically, people have given up on equities. They have all their money basically in 17 basis point T-bills. And there's lots of companies that are doing well and are cheap. So we think the big opportunity is to be long as a long-term investor and be global.
There's blood on the streets.
There certainly is. And there's certainly a lot of blood on Wall Street at the moment. So speaking about financials, this was a topic that we brought up with Tony. He was a big buyer of financials. Do you agree?
We're really less interested in financials. Obviously
Don't you want to be greedy when others are fearful?
Yes.
But others are fearful.
I know, but we think there's other things to invest in.
Right.
And so, the problem with financials in general is they're a little bit more murky in their transparency. We do like financials like Berkshire Hathaway. That's got $22 billion in cash and is essentially unleveraged. That kind of financial we love.
I wonder about, you talk about the fact that sentiment needs to change, and you mentioned confidence. That needs to come back for things to pick up. Isn't it jobs, though, really, that needs to come back? I mean, isn't it jobs that sort of underlies confidence in any U.S. economic recovery?
I completely agree with you. We need jobs.
So what do we do?
Look, I am a securities analyst. I'm certainly not a politician. But I think that there needs to be encouragement for investment. Long-term investment for people to take risks, to build, and to look towards the future so they're willing to hire. And I think that the leadership needs to come from Washington.
But as an investment advisor, you're saying, regardless of the prescription policy, right now is a time when there's so much negativity that being a contrarian, even though we have had this run-up since the bottom of 2009, that being a contrarian investor here makes sense.
Absolutely. We think stocks are cheap. There's lots of opportunities around the world. And at Wintergreen, we're optimistic. I think it's there for the taking. You said it beautifully. The blood is in the streets.
David, when you're talking about stocks being cheap, do you say that relative to fixed income, or are you talking about a particular sectors or particular stocks?
Well, we think about it in terms of particular stocks and industries, and also regions of the world. But if you look at it on a relative basis, you get paid nothing to have cash, and your cash gets eaten away by inflation. So we think, a company like Nestle, which we love. Every day, people eat chocolate bars, they feed their babies, and they can raise their prices and grow globally. So we think there's big, fat, slow pitches out there.
They have pricing power.
Absolutely.
I mean, if we step back and look at your investment window, we know what Warren Buffett says, but what are we talking about as far as a time span here?
We think you got to invest for at least a couple years, and hopefully 5 years. I think that, the last 5 years has been kind to us in a tough period at Wintergreen, and we think The future is bright. But I think people should be investors. As Tony said before, think long term.
But it's hard if you think about this year, right? Because I just had a viewer write in that says, how does the Fed get from what we are now at to 2.7 to 2.9% growth, right? Because 2 quarters of 2% or less, what do we do in the second half? You can't really be that optimistic.
I think if you think long term and you look at who are the richest people in the world, they did it by investing in businesses and focused on building those businesses. As investors, especially today, because prices are a lot lower and earnings are improving, that's what you got to concentrate on.
Any stocks within the real estate sector that you're looking at? Now,
real estate's tough. And, we are involved with...
It's a good place to be a contrarian.
Yeah,
right?
we own shares, we own a big stake in a real estate company in Florida, and we think that real estate will come back. And, one of the big issues from a policy perspective is this problem: there's no liquidity in people's homes. So nobody even knows what anything's really worth. And so that confidence has to come back. And we think it will at some point.
That's a place where you want pricing power to kick back in.
Absolutely.
David, thanks so much for joining us. Pleasure having you on. David Winters,
Absolutely.
CEO of Wintergreen Advisors.